right now, in early 2026, the world of finance isn't just changing, it's being completely rewritten from the ground up. We're seeing three huge forces of tension and transition all colliding at once, and it's creating this moment of, well, both incredible opportunity and massive risk. So let's break down what's happening.
And this is really the central question, isn't it? Are we standing on the edge of a new golden age? One that's going to be powered by some really radical innovation? Or is the entire system facing its biggest test yet, caught between the old way of doing things and the new?
And it all kicks off with our first seismic shift, a total 180 on digital assets. We're talking about a move that turned the United States from a country that was pretty skeptical about crypto into the global hub for the entire revolution. Now, to say the change was dramatic, that would be a huge understatement. Legal experts are clear. The U.S. regulatory environment for digital assets changed almost literally overnight. You have to remember, before 2025, the official stance was basically skepticism, backed up by a lot of enforcement actions. The regulations were so tight that they pretty much kept traditional financial players on the sidelines and put a ton of pressure on any fintech innovators. And then, the whole ambition just flipped. The new national goal laid out by a presidential working group was to make the United States the undisputed crypto capital of the world. This wasn't just a simple change in tone, this was a complete re-engineering of national policy.
So, you might be asking, how in the world did they pull that off? Well, it happened through a whole series of sweeping regulatory changes. All of a sudden, payment stablecoins, the digital currencies tied to something like the dollar, were declared not to be securities. Broker-dealers got the green light to actually hold crypto, and this thing called the Genius Act created the first real federal rulebook for them. Every single one of these was a tectonic shift that, when put together, just unleashed a completely new era.
Okay, so while one revolution was being legalized and kicking into high gear, the traditional pillar of the financial system, the Federal Reserve, was facing its own massive storm. Let's pivot to our second major force and see how all this pressure is building. Now, what's so fascinating here is the story of defiance this chart tells. Okay, so the Fed cut interest rates 3 times leading into 2026. Normally, you'd expect bond yields to just fall right along with them. But just look at that orange line, the 10-year Treasury yield. It's actually higher than when the cut started. The bond market just isn't buying what the Fed is selling. It's basically signaling that it thinks inflation is a way bigger threat than the Fed is admitting, and that creates this really dangerous disconnect right at the heart of the system. So the key thing to understand is that the Fed is caught in a vice. On one side, you've got its official job, keep employment up and prices stable. But on the other side, it's fighting this multi-front war against political pressure, Department of Justice subpoenas aimed at its leadership, and a pretty messy transition for the chairmanship. And look, this isn't just some internal drama. An embattled Fed creates uncertainty for everyone, everywhere. When the anchor of the world's financial system looks like it's losing its grip, it sends shockwaves through every single market. And while the old guard of finance is totally under siege, a new and maybe even more powerful force is rising. And that brings us to our third, and maybe the most potent driver of change, a technology so powerful it's being called the ultimate alpha engine. Of course, I'm talking about artificial intelligence.
1.63. Just look at that number. What is it? Well, it's a Sharpe ratio. It's a way to measure risk-adjusted return, and it comes from an AI-driven investment strategy in a recent research paper. To give you some perspective, a Sharpe ratio over 1 is considered good. Over 1.5 is exceptional. This right here, this is the promise of AI in finance.
And this table just brilliantly shows you how. Researchers found that a baseline strategy, using the old traditional signals, it performed pretty well. But a strategy using only AI, it did even better. But here's the real kicker. When you combine them, boom, you get that stunning 1.63 Sharpe ratio. This is proof that AI isn't just making old models a little bit better. It's finding totally new, profitable signals that we humans have been missing all along.
But, and this is a huge but, here's the paradox. With this unbelievable promise of AI-generated wealth comes an equally powerful and totally opposite reaction: fear. A deep, disruptive fear that is absolutely gripping Wall Street. You'd think everyone would be celebrating this new engine of alpha, right? Not at all. Instead, the market started a massive sell-off in early February, and it was all driven by this growing anxiety over what AI success could actually mean for the industry. You can see the fear right here in the market data. I mean, look at this. Investors fled from technology and financials, the exact two sectors you'd think would lead an AI boom. And where did they run? To defensive, safe haven sectors like utilities. That isn't a rotation, that's a full-scale retreat. It's a clear signal the market is way more worried about disruption than it is excited about innovation.
And this quote nails down exactly why. The fear, as analysts see it, isn't that AI will fail. The fear is that it's going to succeed so spectacularly that it will automate away entire jobs and business models, eating right into the profit margins of the established financial and tech giants. The machine is literally becoming the competition.
So when you put it all together, this crypto revolution, an embattled Federal Reserve, and the double-edged sword of AI, what you get is a financial system that is truly at a crossroads.
We've seen these three defining forces today. First, the floodgates of innovation have been thrown wide open for both crypto and AI. Second, the traditional anchor of the entire system, the Fed, is navigating some really deep uncertainty. And third, all of this has created a wild market paradox, where investors are at the same time mesmerized by AI's promise and totally terrified of its peril. Which, of course, leaves us with the biggest question of all. As these forces reshape the very foundations of money and markets in real time, who will be the winners and who will be the losers of this great transition?